The budget is over, and although property income taxes have gone up by 2%, overall, it's not as bad as feared by landlords and property investors. For months, they've been petrified by many other possible changes, and none of those have occurred. We cover all the feared property taxes and explain what has happened with each one. And we discuss what all this means for landlords and property investors. Hi, everyone. I'm Dr. Tariq, or Dr. T, and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers, and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff and brands such as Tiny, Opus, and Time Computers. Computer manufacturing moved to China by early 2000s, and during the past 17 years, I've researched and analysed the UK property market and developed a property business for 100% passive investors that is different to traditional agents and property companies. My children and over 100 staff now run this business, but I still help out with strategy, marketing, and client advice. We've appeared on the BBC's main property show over 7 times, bought, renovated, rented out, and resold almost 3,000 low-cost houses, and we continue to look after these for our investor clients. I'm now retired from my part-time NHS work, but I really enjoy helping people with property investment and making videos like this. Before we dive in, if you find today's information useful, please hit the like button. Drop a comment below letting me know what you'd like us to cover next. And make sure you subscribe and hit the bell so you don't miss future property tips. It really helps the channel and spreads the word. Let's get back to the video now. First, let's go through each feared property tax and explain what has actually happened. Number 1, income tax. This is the only bad thing for property investors and landlords, as there is a 2% increase in income tax rates. So if you have no other income, and then you have the personal allowance of £12,570 per year, under which you pay no tax on your rent. Any rent above this level would now be taxed at 22% instead of 20%. Rent over about £50,000 would be now taxed at 42% instead of 40%. For limited property companies, there will be a similar 2% increase on dividend tax. 2. Stamp duty reform. Now, there were rumours of big changes to stamp duty with the idea that stamp duty would be replaced with an annual tax on property. This has not happened. And there were also worries that the stamp duty rate could be increased on additional investment properties or for overseas investors. Again, this has not happened. There are no stamp duty changes in the budget. National insurance tax on rent. It was feared that government could add an 8% national insurance tax on rental income. This is not happening. Number 4, 20% VAT on rent. This was rumoured in the media, but was unlikely to happen. It has not happened. Number 5, capital gains tax rates. Currently, capital gains tax rates are 18% to 24%, much lower than income tax rates, and hence beneficial for property gains compared with income tax. Investors buying low-cost properties can minimize the capital gains tax even further by selling one property in each tax year, thereby keeping the gain lower so that they remain a low-rate taxpayer and hence pay the lower rate, and also benefit from the annual allowance each year. Many landlords feared that the government was looking to increase the capital gains tax rates, but the good news is that this is not happening. Number 6, capital gains tax on own use. Property owners were worried about capital gains tax on their own use homes. At present, you don't pay capital gains tax on any profit you make when you sell the property you live in. There were rumours that this could be changed, but again, this has not happened. And in any case, this would not have affected landlords, as it would only have applied to own use properties. If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. Number 7, mansion tax. Mansion tax is happening. But again, this is not really going to affect landlords and property investors, as it only applies to very expensive properties over 2 million. There's an annual charge of £2,500 per year on houses over 2 million and 7,500 on houses over 5 million. Number 8, inheritance tax. At present, many property investors can reduce inheritance tax by gifting their property to their children and other relatives. Now, there were rumours that gifting could be limited, or donors would have to survive more than 7 years in order to be 100% safe from inheritance tax. The good news is that these changes are not happening. The other main tax changes in the budget that do not specifically affect landlords and property investors include the freezing of tax allowances to the current levels for an additional 3 years and reduction of benefit on employee salary sacrifice schemes when making pension contributions. So, what do you think about the tax changes in the budget? In my view, it is overall good news for property investors. Apart from the 2% increase in income tax, all of the other feared property taxes did not happen or are unlikely to affect property investors. The fundamentals of supply and demand are in investors' favor. Demand for rental properties continues to grow because buying houses remains unaffordable for many, and renting is becoming more desirable due to the government changes to increase renter rights and have better property standards. Rental supply, on the other hand, is not increasing. In fact, it's becoming tighter. So any cost increases for landlords will pass through onto tenants, and overall investment returns wouldn't be significantly affected. Please watch the short message from our sponsor at the end. Thanks for watching.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.